morning, everybody. All 8 of you. How's everyone doing today? Hear me okay? There we go. There's the microphone. Good morning, guys. How are you? Good to see you. What's up, Buttercup? Nice to see you guys. Welcome to the morning room. Let's get stuff going. And then let's get to the live market and watch it today. Good morning, Luciano and Rob and Erla and Ale. It's good to see you guys. News is pretty much done and over, guys. At 10 a.m., we are going to have some medium impact, which means that there's the potential that the market may bump and jump. So set a timer, 9:58. Go, hey, there's news in 2 minutes. Let's make sure that we're aware. Protect yourself. Do what you're going to do. And then, guys, we're going to do what we did yesterday and probably what we're going to do tomorrow, to be honest with you. Actually, maybe not tomorrow because it's Saturday. We're going to talk about a high probability trend trade, ladies and gentlemen. We're going to focus on 3 very simple rules. We're going to break them down individually. We're going to talk about momentum through strong triggers. We're going to talk about a clear path. And we're going to talk about an entry area for the highest probability trade that you can take. And this is the trade, guys. Typically wins 70 to 80% of the time. This is the trade that creates confidence. This is the trade that teaches you to read your indicators. Simplicity is the battle cry. Simplicity is what we talk about every day, guys. And I'm telling you, there's a flood of people coming through right now struggling, and I don't know why. Well, I do know why. It's because they're looking for everything, not the best. So we're going to focus on learning to read our charts so that we never miss out on momentum and a clear path. And I'm telling you right now, guys, from the bottom of my heart, good morning, Kenan. If you can identify momentum and a clear path, you're going to find your trades. You're going to understand advantages. You're going to be in a position to have a trading plan that can be profitable and consistent. So we're going to let these 3 rules teach us to read our charts, guys. Teach us to read our indicators. And the reason I do that is because literally 90% of your day is waiting. Guys, I was up at 5 a.m. this morning. It is now 8 a.m. I took 2 trades this morning. 2 trades that fit my rules over the course of 3 hours. A lot of patience. Whole lot of patience. But the thing is I'm not just arbitrarily throwing away money hoping things work. I am trading patterns that have been proven through study to win more than they lose. And that's what the high probability trend trade is, guys. So I want you to accept the fact that trading isn't exciting. It's not fast paced. It's not constantly in the market. Trading is having advantages. Trading is keeping it simple. Trading is doing the same thing every day. And if you look at the successful traders, guys, when they post in this room, everything looks the same. Looks exactly the same. The entries are the same. The advantages are the same. And it's that consistency that tends to pay dividends. So we're going to focus on chart reads today, guys. We're going to focus on it with these 3 rules. Hey, good morning, Trading Book. Momentum, clear path, and an entry area. And I'm going to say it one more time for the people in the back row. Once you can figure out momentum and a clear path, everything falls into place. Once you insist on momentum and a clear path, you'll find that you're not as prone to give it back, guys. Good morning, Steve. So we're going to take these 3 rules. Each rule creates the advantage. It's the advantages that create a trade. And we're going to take these 3 rules. We're going to do it on 2 charts. We're going to big chart, little chart. Large chart, small chart. Giant chart, tiny chart. Whatever you want to call it. But the large chart leads the way. The large chart tells you that it's time to look for a trade, guys. Don't get mesmerized by the siren song. Let the large chart do its job. Because on the most current bar of the large chart, it's going to define the direction of the market. If the background is red, the market's going down. If the background is green, it's going up, guys. Let's commit to trading with the trend. Anyone that's ever tried to be a counter trend trader will probably tell you the story. John Novak had a broker friend back in the day, and he said, John, you want to know how to make $1 million in your trading account? John said, heck yeah, Mr. Broker Man, tell me how to do it. The broker said, I want you to fund it with $3 million and fight the trend. He goes, you should be down to $1 million by the end of the year. True story. So we're going to let the large chart lead the way, guys. We're going to go direction, momentum, and areas. All of this is going to be taken care of from 1 bar on the large chart. Your first two rules, the advantage of momentum, the advantage of a clear path, come to you on the large chart. And once this says that it's time to look for an entry, when we have momentum, when the rules are met for the clear path, guys, the small chart's like an x-ray of the large chart. It is taking that one bar, that most current bar, and from the top to the bottom on these bars on a small chart, there's like this big retracement and a push back in the direction of the trend and the momentum. And we're going to literally refine that one bar into 20 to 30 bars. You guys are going to be able to pinpoint exactly where the market is most likely to continue. And this is rule number 3, getting you into the market. And we do the two charts because there's two forces, guys. There's the buyers and sellers in the large crowd. These are the people that establish trends. Good morning, Zorro. These are the people that create the momentum. These are the people that react to those key areas on the large chart. We're going to go with the flow. They are the path of least resistance. But then there's always this group of people that think they can beat the large chart, guys, or they have just enough money to create these shoves and they're taking quick profits. But these guys fail like 70 to 80% of the time on the small chart, the small crowd. You guys are going to use that chart to pinpoint exactly where that failure is most likely to happen, and that will become your entry for the highest probability trend trade. So we're going to keep it super simple today, guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. You guys are going to simulate, practice, take pictures, post in the room. Don't be shy. This is your classroom. And we're going to simplify. We're going to focus on that one trade, and that first trade is going to take you to the second trade that I introduced you to. But I'm not going past 2 trades. I won't teach more than 2 trades. You can post in the room and ask me questions about trades that you're taking that fall outside. But guys, I'm going to give you as little as possible because I firmly believe that's what you need to be successful as a brand new user. So your step-by-step path, guys. Post in the room. Don't be afraid to post in the room. There's no such thing as too many questions. There's no such thing as, man, I'm sorry, I didn't want you to have to repeat this. Guys, I want to repeat it. The more I say something, the more likely it is to click. But the thing is everybody learns differently. So I could say the same thing 100 times and it not click. But if you tell me, hey, Mark, it's not clicking, I'll say it a different way, and I'll find a new way to teach it that suits you. So make sure that you're being vocal if you need some help. Post them in the room, guys, and track yourself. Track your performance, track your trades, and that's going to be the spreadsheet. So there's really 2 parts, guys. The first tab is trade tracking. Every trade that you take, drop it in here. There's the instructions how, and then more importantly, guys, here's how to annotate. We had a discussion yesterday. Annotation isn't for me. Good morning, PFI. Guys, annotation isn't for me. I can look at your charts and know exactly what's going on. Annotation is for you. Annotation is to make sure that you're reading your indicators properly. Annotation is letting me know that you're reading your indicators properly, because what happens, and this is such a wild phenomenon, is we'll talk about a rule, and then you will half absorb it, and you'll create your reality based on that half-truth. And you'll trade it, and you'll get mad when it doesn't come to fruition. But if you post in the room, and this was courtesy of one of our users, she talked about where she came from, right? Strong top, weak top. She described rule number 1, exactly what it means to have it met. And she talked about rule number 2 and exactly what the rules are to make sure that that is met. And what she's doing, guys, is she's not only saying, hey, this one fits my rules, but she's saying this is exactly what my rules look like. Hey, Mark, this is my chart read. Is there any problem with it? And then she shows me exactly where she gets in and why. And then I see her exits, guys. And what this does, for me, I can look at this instantly and say this is a high probability trend trade. But for you, you're going to come back and study this picture. And that's really what makes this spreadsheet work, is you're going to come back and look at it. And you're going to look at everything that you've done over the course of the day, maybe over a cup of coffee the next morning. And you're going to ask yourself what worked and what didn't work. So guys, if you traded yesterday, did anyone trade yesterday and make a mistake? I did. I made a mistake yesterday. Anybody else? Just me? So what I had to do this morning, guys, is I had to go back and I had to look at my mistake and I had to say to myself, okay, wait a minute. The mistake that I made cost me a win. The mistake that I made cost me money. And guys, and you know what it was? Is I didn't have momentum on my small chart. I didn't have momentum on my small chart, and my rules said that I had to have momentum on my small chart. So today, the first thing I did is I woke up and I said to myself, all right, dummy, make sure those trigger lines look right. Make sure those trigger lines fit the plan, because the plan has been proven to win more than it loses. And I promise you, if you do this every day, especially you guys that feel like you're struggling a little bit, you're going to start to pinpoint the things that are taking that success from you, and you're going to start to pinpoint the things that are bringing you that success. And guys, that's Pete, you made one this morning. I did too. I did too. I think I make a mistake every day, guys. I'm okay with it. I learn from my mistakes every time. But going through this process, guys, it pays huge dividends. Use the spreadsheet. Take the pictures. You've got to know what it looks like to have your rules met. And Ollie, we'll address that. We'll address being too careful. And I'm going to tell you exactly why people are too careful. And I'm going to do that in about 45 seconds, maybe 2 minutes. Guys, you've got to learn the looks so that they're easy. Good morning. Nice to see you, Tom. How do I make it easy to recognize these rules? How do I make it easy to know that these advantages are present, guys? The second tab of the spreadsheet. These are all the rules for the high probability trend trade. They're broken down individually, and the pictures that I put into them, not only are they broken down individually, but they are annotated exactly what it means to have that rule met, exactly what it means to me in terms of advantages, exactly what it looks like, guys. And the idea is that repetition creates recognition. So you need to be clicking that camera all day long. We scrolled through Traders Chat yesterday. Do you guys remember that? And John Novak posted 30 to 40 pictures for every one picture the entire client base posted. John Novak is studying a new concept. He is taking pictures, he's annotating charts, he's recognizing patterns, and guys, he's throwing them at me for feedback. We're going back and forth and working on this. You guys have the opportunity to get where you want to be quick if you will take pictures, if you will study pictures when nothing is moving. Learn these looks, guys, and that's what the final tab of this spreadsheet does. Almost 400 pictures of Nexgen users being brilliant. Entries for the high probability trend trade, management for the high probability trend trade, patterns that repeat themselves over and over in every market, termination conditions, areas that may stop the market. And then for you adrenaline junkies, there's some stuff on the NASDAQ here, and I'm going to tell you right now, you guys that want to trade the NASDAQ, there's a difference in the entries. The first two rules that I talk about, momentum and clear path, are 100% consistent, but NASDAQ has different entries, and I think we did some good lessons on that yesterday. I'll be excited to see the results from it today. So annotate, post in the room, take 1,000,000 pictures, guys. I've already taken about 20 pictures today. I take probably 30 to 40 pictures a day. I take pictures before I enter the trade, and I literally type my rules on that chart to make sure that I'm following my rules. I'll take pictures after the trade because I want to make sure that I managed it properly. And if I have time, I'll take pictures during the trade. And I'll just kind of look at them because I'm going to come back and study them and make sure that I didn't miss something. And the people that put the most into learning the software are the people that get the most out of it, guys. This is how to get there. This is exactly how to get there. Post lots, take 1,000,000 pictures, and then go back and study those pictures. And then let's talk about, and I'm going to talk about, Ollie, this is for you, and respectfully, Z Robot, I'm going to disagree that it's fear, but it's a derivative. Guys, you have to trust the rules, and that's what it is. You have to trust the rules. If you're skeptical, you're not going to pull the trigger when it's time to pull the trigger. If you don't believe that your pattern wins more than it loses, you're not going to pull the trigger when it's time to pull the trigger. You're going to talk yourself out of it. And Ollie, one of the biggest things that I see with people that talk themselves out of trades, and this is from me, this is my own personal experience, because when I was brand new, I did this, and I'm telling you, it drove John Novak nuts for me to send him pictures of why I didn't take the trade. And it stems back to, I kid you not, it stems back to making the rules more difficult than they need to. Creating subtext and different rules and addendums and different things that aren't the rules. Because what happens is you'll start taking just this idea of strong triggers, right? And guys, this is what strong triggers is. All it is a separation between the smalls and the large. That's it. And if there is no space between the smalls and the large triggers, there is no strong trigger. It's that simple. But what we'll do is we'll start saying, well, the space didn't look as big as I needed it to look. Or I thought I saw a little hitch in the small triggers. And then I exited, or I refused to take my trade because I swear they were bending against me. Has anyone ever done that? This gets referenced all the time, guys. So, Ollie, what you have to do is, man, you got to keep it basic. You've got to keep it simple. You've got to keep it focused on what it means to have strong triggers if this is your thing, guys. When the background is green, there's two trigger lines, small and large. Solid and dash. That's it. And the only way you can ever have strong triggers in an uptrend is if the background is green, making it an uptrend, the large triggers are green, and the small triggers are green. The colors have to match to have strong triggers. And then it is not strong triggers until you can see daylight in between the two, the small and the large. And I want you to picture scissors opening. Open scissors means strength, guys. And that strength is there until the scissors close, and then we have weakness, and that's it. There's two options for trigger lines. They're either strong or they're weak. So if you're talking yourself out of trades, make sure that they're strong. And guys, strong triggers is really one of the easiest lessons. Let me open up a large chart. They killed the S&P to the downside today, didn't they? Strong triggers means separation. Strong triggers means separation. When the scissors close, smalls inside of the large, this is weakness. Look at the retracement, guys. They start to come back. Look at the retracement. There's no daylight. So you're going to go through and you're going to start taking pictures, strong and weak. They're weak, big retracement. Let's see if we can find another one. They're on the wrong side and they don't match. There's a retracement. They're weakening. Retracement. So guys, go through and learn this look. Study this look. Commit to this look. Is everybody cool with this? I don't have a lot of new people in the room today. Strong triggers mean that the small are above the large are wide, the space is there. The scissors are open. Smalls are below the large are wide, the space is there. The only way you're ever going to have strong triggers is a brand new user, guys. And then everyone's like, but Mark, there's these different scenarios and there's these times when this happens and that happens and it doesn't look right. And let me show you. Guys, we're building a foundation. We're building a plan that revolves around the absolute best of best, that doesn't have us making in-the-moment decisions other than it is or it is not. As you grow with the software, Ollie, you mentioned this yesterday, I think, when one line is inside. Guys, it's slowing. Momentum is slowing. It will never be strong triggers. Weakness. It will never be strong triggers. This is your best of the best initially, guys, but as you grow with the software, there's going to be a lot more opportunity for you, but you've got to recognize the basics first. So strong triggers lead the way. Strong triggers push the market, guys. And when I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum. You're going to hear it every day in this room. Odds favorable momentum is what it takes to break key areas. You guys that keep getting your butts kicked on those 50-50 trades, the second trade that I teach, most of you skip momentum. And it takes momentum to break an area, guys. So momentum, no momentum. And when I have no momentum, guys, anything can happen up or down. Odds favorable to continue with the trend, anything can happen up or down. Embrace the verbiage, because the verbiage tells you exactly what the likelihood of success is. So is everybody cool? Strong triggers? We're going to go through a little bit. Triggers are pretty quick. I want to make sure you guys are good. So then let's talk about termination conditions, the most broken rule among new users. How come? Because it forces you to be patient. Because termination conditions will keep you in that 90%. So termination conditions, these are areas that may stop the market. These are areas where the large crowd is making decisions. These are the areas that may create reversals. These are the areas that may create untradeable bounces. These are the areas where the buyers and sellers may fight. And the easiest way to say it is that decisions are made at these key areas, guys. Decisions are made. The people with all the money that made the market go up are going to make a decision at that red line. Everybody that was making the market go down is going to make a decision at that blue line, at that pink divergence high, at that divergence low line. So your first job, if you're learning termination conditions, if you're struggling with termination conditions, your first job is to memorize which lines may stop the market. And this is it. This is your roadmap. Each and every line on this picture, I just dropped it in the room, may stop the market, may create an untradeable bounce. It may break. You'll never know. You will never know what's going to happen in the market. So what we're going to do is we're going to use a time-tested, proven pattern to know when we should not trade, to know when it's not okay to take that next trade, to know when our advantage is gone. And everything begins with price reaching an area. Price reaches a line, guys. It's the easiest way to say it. Price reaches resistance. Price reaches a divergence high line. Price reaches a yellow 1-to-1. Price reaches a divergence low line. Price reaches a blue fib. And when price reaches the area, if it's an area of resistance and your trigger lines are below, it's a termination condition. That termination condition may reverse the market. That termination condition may create an untradeable bounce. That may set off a fight between buyers and sellers. It may break. Write down on a piece of paper, I don't know what's going to happen, but I know that I don't want to be caught in the decision-making process, which means if price reaches resistance and the triggers remain below, sit on your hands, do nothing, don't trade into the area, wait for the reaction. If price reaches Fibonacci support, divergence low, yellow 1-to-1s, sit on your hands if the triggers are above, wait for the reaction. You do not have to predict. I can't stress this enough, guys. You do not have to predict. All you have to do is wait for the advantages. And guys, this is advantage gone. And let's go and see if the market actually respects these lines at all. I might have just made this up. I don't know. Somebody should probably study and check me. Oh my gosh, look at that. The sellers killed it all the way from a line, and they broke lines, and then they hit a big ugly line, and look at the bounce. Stop the market cold. Stopped it. Man. Right off of resistance, right off of divergence high, right off of support. Where did it start? It started from a blue line that stopped at a red line. Guys, I'm telling you, this is the most broken rule. And let me give you a little insight on how Nexgen creates rules, on how John Novak has spent the last 27 years teaching people to day trade. So price reaches the area. And let me do this right here. Areas will break. However, if the triggers have not cleared the area, they cause losers more than they allow winners. Does that make sense? When price reaches an area and the triggers remain below resistance and above support, it has been proven through years of study that you're more likely to lose if you trade into that area, which means there's not an advantage, which means that you're trading hope. And guys, hope is the absolute worst plan because hope just doesn't carry the trading world. So those are your termination conditions. And when do I have a clear path? Well, it begins with price isn't hitting lines. The clear path is exactly what it sounds like, guys. Price reaches Fibonacci support. The triggers remain above, and everyone in this room sits on their hands and says, you know what? The market trades $300 billion a day. I can be patient for 5 minutes to see what the reaction will be. If your small triggers and your large triggers get below support, support is broken. You're going to see it behave as resistance. This is what dictates a clear path, guys. When your small triggers and your large triggers get above resistance, resistance will behave as support. This is your clear path. Your clear path is good. It's solid until the next line is reached. And when you reach the next line, you start the process over. Where are my triggers? Every line will be a termination condition for a moment. Every line will have the potential to break for a minute if it's going to break. But it's not until the small and the large are to the other side of the line that we consider it broken. So just for grins, price got to that Fibonacci resistance. My small and large have not cleared. This area is not broken. My path isn't clear. And it really is that simple. Small and large got below support. Look how support behaved as resistance to the freaking tick. By allowing it to clear, you stay out of the fight. Look at all the fluctuations right at the key area. Let me show you what this looked like on the small chart. Guys, I'm a firm believer in termination conditions. And I want you to see this. Because I was watching it this morning. All of this nonsense happens right at this key area. All of this up, all of this down, all of this fight, all of this potential to lose over and over and over and over again happened right at this key area. But once we got below those fibs, the sellers took over and down it went. Momentum has nothing to do with the mid-band PFI. It has absolutely nothing to do with the mid-band. Momentum is momentum. I've got the best momentum ever right now. There is one time, PFI, there is one time when a large chart mid-band behaves as a termination condition. And guys, that only time is if the large triggers are a full bar away. Other than that, it's just a squiggly line on a chart. That's it. So PFI, if you don't like mid-bands, don't trade into them. It's that easy. If you don't like mid-bands, wait for everything to get to the other side of it. Everybody has a thing, guys. Everybody has a thing that makes them uncomfortable, but for whatever reason, we gravitate back to that thing that makes us uncomfortable. So PFI, if your brain tells you, dude, don't do it, guess what? Don't do it. It's that simple. But right now, my mid-band is not a termination condition because my large triggers aren't a full bar away. It's nothing more than a squiggly moving average. That's it. But this right here says that the area is not broken. And let me see if we can find an example of when the mid-band is problematic. Just for reference, because there's a time when I won't trade into the mid-band, and it looks a lot like this, PFI. If I come down to that mid band area and my large triggers are above my reversal bar marker, absolutely no shorts. You couldn't pay me to trade into that mid band because the mid band could create a big untradeable bounce. And of course, support did as well. But sometimes you'll see those mid bands, there you go, floating in the middle of nowhere. And the trend is down and your triggers are starting to roll PFI. But notice how there was room for an entire reversal bar to get back to those large triggers. That's when you don't trade into these mid bands. That's when these mid bands are behaving exactly like a termination condition. Let's see if we can find another one. Price comes all the way down to the mid band. Of course, it hits support too, but those large triggers didn't follow. That's my big red flag. Don't trade into the mid band. And the cool thing is, there it is again, is you can scroll back, man, and you can see these 100 times. Look at that level of momentum, and when we got to the mid band, those trigger lines were close. And that level of momentum blew right through it. It was not behaving as a termination. I love this, guys. Everything we do is patterns. There it is again, PFI. Do you see it? So one of the things you could do, guys, to start developing a little bit of confidence, a little bit of like just what am I looking for, take that picture, draw an arrow, and say, like, build that confidence. The only time my mid-band on the large chart is a termination condition is when the large triggers are a full bar away. And what that means, they were below the reversal bar marker here. And I'll show you exactly what that means, Tom. But this is it. So PFI, one of the best things that you could do for yourself, one of the best things that you can do to create a little confidence, a little awareness on what the indicators are telling you, is go back and take 20 pictures of what we call the gap theory. Go back and take 20 pictures, scroll back and find 20 instances where that stupid mid-band held like a brick because the large triggers didn't follow. And then Tom, what we're talking about here is what we call the gap theory. And one bar away, I'm going to show you exactly what it looks like. And guys, I'm going to tell you right now, I promise you everything that I could possibly give you to make you better, but I can't make you study. If you guys refuse to go back and study this, you're probably not going to get it. So Tom, the gap theory, as we call it, because there's a huge gap. When price accelerates away from the large triggers and hits an area, Fibonacci area, whether it's a line, whether it's the mid-band, whether it's a one-to-one, a divergence high, if your large triggers are a full bar away, meaning this white bar tells me where this price bar will become a reversal bar. That's a full bar. Does that make sense? When you make a reversal bar, that's a full bar. If your large triggers are below that reversal bar marker, price is likely to suck back to them. Price returns to the large triggers. It's the same thing that gives us our great entries. So what happens, Tom, is it's not a trade to go short. It's not a setup. It's not even management. What it is it's no long trades yet. Even if you have odds favorable momentum, no long trades yet. Your path isn't clear. Obviously, the path isn't clear here because of all the resistance and no triggers breaking. But if all I had was a mid-band up here, this look tells me don't trade into that mid-band. And what happens more often than not, there it is right there. When those large triggers don't follow, price just sucks back to them. And what it does is it keeps you out of an ill-fated short here. And it keeps you out of taking, where to go, a long before it's time to take the long. Guys, it's a patience piece. And the mid-band can be scary, guys. And usually, PFI, when people are scared of the mid-bands, they're typically breaking another rule. When people have challenges trading into mid-bands, more often than not, they're breaking another rule, whether it is the entry rules or the momentum rules. So Tom, that's it. And that's the gap theory. And the gap theory, again, if you go and PFI, this is for you too, on the spreadsheet, there's probably 25 pictures labeled gap theory here with that exact phenomenon over and over and over and over. So go check it out. Go study it. Go make sure you're comfortable with it. So guys, right now, most current bar in the S&P, do I have odds favorable momentum? What do you think? No. Z-Robot. The only way I ever have odds favorable is if there's a separation between the small and the large. That's it. That's the only look. See how the smalls are inside of the large? Let's turn this into a lesson. Do you see how the smalls are inside of the large? This is weakness. This is anything can happen. No, that's what we're talking about. There is zero momentum. This market could go up or down. Hell, I don't know. Anything can happen. Right here, the odds are favorable for going up. So you should be thinking momentum. There is no momentum in the market right now. The triggers are up, but unless there's separation, guys, you have to believe that there is weakness here. You have to believe that anything can happen up or down. Does that make sense? It's one look. And this is one of those things, guys, is you've got to be able to determine the difference between strength and weakness. And if you're trying to do that by taking trades, if you're trying to learn your rules through taking trades, guys, that's not the way to do it. The way to learn your rules is to look at it individually. So strong triggers up. Right there. That's strength. 100%. Let's see what this one looks like. Oh my gosh, it looks exactly the same. Hold it. Let's make sure that I didn't do this wrong. Let me click on this strong trigger. Whoa, there it is again. And it's described 100%. So if you go through and you look at these 50 pictures of strong triggers that I've given you in the spreadsheet, Z-Robot, you're never going to make that mistake. And then the cool thing is guys, I'm a worker. Weak triggers. Look at that. That's it. Anything can happen, all caps. So it's important, guys, and especially if you're talking yourself out of trades, know what it looks like to have weak triggers. And it's probably not a coincidence that the market reversed from both. Does that make sense, everybody? This is what we're doing. All we're doing is we're working on strength. We're working on where are my triggers? Where are my triggers versus the lines? So, and guys, we did that little sidebar on the gap theory because the mid band, if the large triggers don't follow, is a termination. But let's go back because I am the king of digression. Price reaches an area, triggers don't break, sit on your hands, do nothing. Small and large get to the other side of the area is broken, the path is clear. Guys, that is high probability trend trade 101. So in the very beginning, on the large chart, respect terminations, study terminations. Go back and look at these lines stopping the market cold over and over and over and over again. And then that's going to take you to the second trade, to the 50-50 trade, to the medium probability trade, guys. And this is a trade where an issue exists. And the issue is that you don't have a clear path. You don't have small and large below the area yet. What you'll have is 50% of your triggers through. And you'll have 50% of your triggers not through. How's that for a clever name? 50-50. You could call it a one above, one below. You could call it a straddle trade, whatever you want to call it. Doesn't matter to me. But what you have to understand, and then Z-Robot, this is where momentum lessons are going to pay dividends. It takes that odds favorable momentum more often than not to break areas. We never want to sacrifice momentum when we're looking for areas to break, when we're hoping for areas to break. And then guys, this is one thing. For you guys that are losing 50-50 trades, you're more experienced users, I want you to embrace one word. The small triggers have to smash through the area, guys. If you are looking for a 50-50 trade, and those small triggers have only prairie dogged their head above support or below resistance, guys, that's not a smash. These fibs are areas that could be a little overrun. Let them get through. Let them get through with aggression and with that angry momentum, guys. This is how areas break. This will be the second trade, and I'll give you a plan for it before we're all done. But I want to ask one more time, guys, is everybody cool? Let's look at a different market just for grins. If price reaches an area and the triggers don't break, sit on your hands. This is crude oil, guys. Look at the bounce that came off of resistance. Look at the bounce that came off of support. They got through a little bit, but there's those darn weak triggers. There's those weak triggers creating a little bigger, right? And sometimes they break. They crushed crude oil to the downside this morning. But support holds, right? And support holds and resistance holds. But Doug, we're not worried about the price bars. We're not worried about the price bars. I'm worried about the triggers. 100%. 100%. It's all triggers. Look at the momentum. And that area smashed. That area broke. And guys, the easy trades are between areas, and your trigger lines will define, not the price bars. The only time, Doug, that I reference price bars, and this is one of those things. This is where you'll begin to create your own rules outside of the rules. The only time the price bars matter in terms of termination condition is when they reach the area and your triggers define it as a termination condition. And then it's 100% trigger lines, 100% trigger lines. The price bar is clear right here. The area doesn't break until here. Do you see that? The price bars are already below. The area isn't considered broken until all the way over here. And guys, that's where this next look comes in, is you'll be able to capitalize a little bit before those triggers clear. And you'll be able to capitalize on that potential. And I'll give you a plan to do it. And then Tom, did that help on the gap theory? Did we get enough examples on that one for you to go, okay, I can study this? And guys, the gap theory is the only way you need it as a brand new user is to define a mid-band as a termination condition. That's the only reason you need the gap theory as a new user, to define the mid-band as a termination condition. So lines on the large chart, ladies and gentlemen, can create problems. Lines on the large chart are where decisions are made. Lines on the large chart can stop your forward progress. The easiest trades are taken from the lines, away from the lines, rather than into the lines. So when your rules are met, guys, when my large chart looks like this, when the momentum is strong, when the path is clear, I'm going to go to a smaller, faster chart and look for an entry. There is one more termination condition that we're going to talk about. This happens on every time frame, guys, any chart. But you're going to see it first on a smaller, faster chart. You're going to see it first on your entry chart. And it's 3 divergences in the same price range. 3 divergences. What's divergence? Divergence just means loss of momentum. If you see this light blue line from a low pivot, it means that the momentum is not following price. If you see the magenta line from the high, it just means that momentum is not following price. Guys, you don't even know about this loss of momentum till like 3 bars up. But if you see 3 print in the same price range, that may terminate the trend. This is your small chart showing you change that you can't see on the large chart. This is your small chart saying, oh man, they just keep losing momentum. This thing may push up, it may terminate the trend, or it may push down. So if I go to look for an entry and I see 3 divergences, guys, that's it, it's game over. Rule number 2 is not met. And it even becomes more powerful when those trigger lines work their way in, or you get a little head and shoulders pattern. But just 3 on its own, it's got to be enough for new users. Those 3 lines, it's going to help you predict change, guys. And you'll see something like this at a high. When your large chart says we're going, and you go to look for that entry, And those three divergences keep you out of the loser. It's kind of cool when that happens. It feels good. So rules 1 and 2, guys. Large chart, big chart, strong chart, big crowd. Lead the way. Strong triggers are going to give you momentum, guys. Strong triggers are gonna give you a market that's likely to push in the direction of the trend. What a huge advantage. There are so many trading plans that revolve around just momentum. And then the large chart lines are going to define where problems may happen. The large chart lines are going to tell you when you need to be patient, when you need to wait for that clearing or that reversal. But once you have these, we're going to go to the smaller, faster chart, guys. We're done on the large chart. Don't even need to look at it anymore. The large chart defines direction, momentum, and the clear path. And once I have my rules met, and that's key, once my rules are met, on a smaller, faster chart, I'm going to use a limit order to buy or sell a pullback, that little shove by the small crowd, and I'm going to do it at an area inside of triggers. That's the rule. Buy or sell a pullback at an area inside of triggers, guys. Why are we going inside of triggers? And you know what? The gap theory lesson was a great intro to why we use these triggers. Price pulls back to large triggers, guys. Price pulls back to large triggers on the large chart. Price pulls back to large triggers on the small chart. It's almost a guarantee. Nothing's a guarantee, but it's almost a guarantee. Price returns to the large triggers, or if you will, price corrects to the moving average. So we've taken this idea that on a large chart, price loves to come back to these big triggers. And on a small chart, price loves to come back to these large triggers. So we've just put the large triggers from the large chart on the small chart. If price corrects to the large triggers on the large chart, if price corrects to the large triggers on the small chart, more often than not, if we put them both on the small chart, large or smooth, native to the small chart, used for momentum, synthetic are just the large triggers from the large chart. Guys, when these overlap, when they are one on top of the other, and I always say 2 snakes riding piggyback. Guys, this is your best of the best. What you've done is you've taken 2 correction points and turned them into one. You've taken 2 places where the market may return and turned it into one. Does that make sense, everybody? We're going to use this idea of the correction point not only for entry, but also for management. Price is likely to return to these large triggers. So when I have areas, lines, fibs, midbands, yellow 1-to-1s inside of that correction point, guys, this becomes the highest probability trend trade you can take. This is the best of the best. This is going to give you the least amount of risk. This is going to give you the highest amount of profit potential. Insisting on buying or selling a pullback at an area inside of favorable large triggers, guys. And that's what you should be writing on your chart every day. We're going to create a window of opportunity, the place where the market is most likely to continue. Are you guys following me? I'm trying to slow roll, and I kid you not, I have a giant piece of paper on my desk that says slow. I'm trying to slow myself down. That was for you, Tom. I thought of you first thing this morning when I was setting up. Because I do. I get a little wound up, right? So, guys, all the things that I take for granted, all the things that are second nature to me, we're teaching you. And this is one of the reasons why your questions are so important. Because if I don't see questions, I assume that you have it, and I go to the next topic. So, to define our entries for the highest probability trend trade, to define your entry for a trade that typically wins 70 to 80% of the time, when everything is up on the large chart, when the rules are met on the large chart, I can't stress this enough. When you have momentum on the large chart, when you have a clear path on the large chart, we're going to let the small crowd do their thing, guys. We're going to let the small crowd fight. And that fight begins with a reversal bar. And a reversal bar is nothing more than a fancy way of saying the first down bar after all of these up bars. And guys, this reversal bar signals the beginning of the pullback. The reversal bar is not your entry for the highest probability trend trade. This signals the beginning of the fight. This starts the process for pinpointing our entries. So once I get the reversal bar, the first thing that I do is I find those trigger lines, guys, large and synthetic. And it might be large a little bit above the synthetic, and it might be synthetic a little bit above the large. I don't care. From the very top line, no, Tom, no. I'm going to show you why. From the very top line to the very bottom line of the triggers, guys, the tighter they are, the smaller this box. Does that make sense? The tighter they are, one on top of the other, the smaller the area is where I'm going to look for fibs, midbands, and yellow 1-to-1s. This decreases risk. Once I identify these trigger lines, we do. And do you know why, Tom? Because the 13-2 has to have momentum. And the 13-2 absolutely, positively has to have a clear path. And once all that happens, we go to the small chart. We're done with the large chart. When the first two rules are met, and let me show you. When the first two rules are met, when I have momentum, when that path is clear, the market is literally trading all the way up here at 97.06. The market is way up here. If we get a reversal bar, something went horribly wrong. The market headed back down. Does that make sense? We don't want a reversal bar. What we want is a reversal bar on the small chart. We want to find those triggers, and then we want to find the areas inside. A reversal bar on the large chart typically means that we just took a loser. So we're going to create this window of opportunity. This window where the market is most likely to continue. This window where the small crowd is most likely to fail. And guys, I can't stress this enough. Tight triggers save lives. Your window of opportunity for the entry, Tom, I'm such a stickler on words. For entry, it's all 5-1. You could minimize your large chart when the rules are met. Don't even have to look at it. Everything is 5-1. Reversal bar starts the process. Find your favorable large triggers. Define the areas within. Fibs, midbands, yellow 1-to-1s. From the highest point of support to the lowest point of support inside of favorable large triggers. Ladies and gentlemen, this is the point where the market is most likely to continue. This is the point where the small crowd is most likely to fail. The large chart has odds favorable momentum and a clear path. We don't expect these guys to get a lot of work done. And your entry goes at the top of the window, about 2 ticks above the highest point of support inside of favorable large triggers. And this is your entry. This is the best of the best. This is how you're going to get into the highest probability trend trade that you can take. And guys, we can do it both directions. So when the large chart says down, when the large chart says odds favorable momentum, when the large chart shows you that you have a clear path, I'm going to wait for a reversal bar on my smaller, faster chart. This is the beginning of the fight. So once I get the reversal bar, the first thing to do is to find those triggers. Are they favorable? Are they one on top of the other? You have two snakes riding piggyback. If I do, I'm going to look for the lines, guys. I'm going to look for fibs, midbands, yellow 1-to-1s. But the thing is, they have to be inside of those triggers. I expect price to come back to these triggers. And guys, every time I take a trade, I just tell myself price could go to the top of those triggers. Every time, price could go to the top of those triggers. But if I have a line inside of those triggers to create a bounce, my entry is 2 ticks below that lowest line closest to price. Every time I look for an entry. Good morning, Cindy. I believe in my heart that price may go to the bottom of those triggers. But I'm going to enter at the highest point of support inside of favorable large triggers. And guys, this is why I ignore any lines on what I'm going to call the wrong side of the triggers, the wrong side of the correction point. Any line on the wrong side of those triggers, guys, my edge is gone. My advantage is gone. I don't want to enter a trade up here. Things have gone south. And guys, that's going to take you to your first stop placement. When you study this, and I'm telling you, if you study it for a week and you start practicing these, you're going to be able to define that window of opportunity from the lowest point of resistance to the highest point. And you're going to say to yourself, I don't expect price to correct beyond these triggers. If it does, something has gone wrong. If I get past those lines inside of favorable large triggers, if I get past the top line of those trigger lines, guys, I don't want to be in the trade anymore. And this is one of the great things, guys. You can minimize your losses dramatically by understanding where the market is likely to continue. Because your first stop, listen to the words, is placed where the market should not go. It should not go beyond that correction point, that top of the trigger line. And your initial stop is 4 to 5 ticks on the other side. 4 to 5 ticks, guys. Give it a little breathing room. And if the small crowd can push up to there, guys, they can have my money. Because I had odds favorable momentum, because I had a clear path, because I entered where the market was most likely to continue. Man, if they've got it in them to hit my stop 4 or 5 ticks beyond those trigger lines, that's their money. They earned it. Good on them. I'll wait for the next trade. I don't expect price to get below the bottom of these triggers. My initial stop is where the market should not go, 4 to 5 ticks below. Does that make sense, everybody? It is not a number. There is not a number. It's not 12 ticks, 10 ticks, 20 ticks, 50 ticks. It's not 173 ticks. Ladies and gentlemen, your stop placement is where the market shouldn't go, and it may vary by the trade. The tighter your trigger lines are, typically the least amount of risk. Is everybody good with that? This is your entry. Great entries create manageable trades, ladies and gentlemen. Great entries define where the market is most likely to continue. Great entries define your first stop placement, guys. And then here's the study. And then, Tom, I think this is where you may have gotten confused. And I want to show you some cool stuff that happens. Let me take a picture of the picture. First things first, guys. Large chart says up. Large chart says momentum. Large chart triggers get above. The path is clear. Is everybody good with that? Can we let the large chart lead the way? I hope so. You're quiet today, guys. Once I have this look, the market's all the way up here. And guys, has anyone ever heard of the fear of missing out? Fear of missing out makes traders make bad decisions. Makes traders jump into the market, makes traders move their stops, makes traders absolutely panic, guys. And I'm going to tell you, as a brand new user, your fear of missing out is going to do everything it can to mess with you as you're not getting paid. I'm just going to tell you right now, brand new users, you're going to want to be in a trade so badly. What system are you getting issues with, Z-Robot? Discord? Ninja Trader? Apex? I'm not sure. So, guys, this is where the methodology has come in, and this is decades of teaching people. When the market's all the way up here, this is when the rules are finally met. And there's only 8 ticks. There's only 8 ticks until the first trouble spot. So, Ollie, have you ever said to yourself, there's just not enough room, I'm going to miss this trade? Because this is pretty common. This got me a lot. There's just not enough room to get to that divergence high. I guess I don't have a trade. And guys, I hear that all the time. Well, we almost hit a termination condition. There's no such thing as almost hitting a termination condition, because price has to reach it for it to be a termination condition. And guys, what this pink line 8 ticks away is, it's a target. And because we wait for the pullback to the area inside of favorable large triggers, that 8 ticks, guys, is now, I don't know, from 86 to 13 is almost 30 ticks, almost $300 worth of profit because we wait for the pullback. There's so much room to get paid. And this is one of the big advantages. You would now, right? But that's one of the things. Another thing that new users will do, guys, I'm just using this picture to go over the new user stuff. But Mark, price reached a 1-to-1. Mark, price hit a line on my small chart. Guys, if you don't believe, if you haven't been around, studied, and repeated the phrase, large chart defines direction, momentum, and areas, this 1-to-1 might scare you out of the trade. Oh no, I hit a termination condition. I can't go long. Anyone else other than me done that? That's a pretty common one. Areas are defined on the large chart. The large chart is this big, slow-moving freight train of a chart. This 1-to-1 is exactly what I needed to get back to my entry. Thank you, 1-to-1, for the bounce. Don't let it scare you out. Another common thing new users will do. But Mark, my small triggers turned against me. And unless you're trading the NASDAQ, this is no big deal. It's that little loss of momentum that gets us back to the best of the best. And guys, these are just some common things. I'll also get people that say, but Mark, there was divergence on the trade. Guys, it takes 1, 2, 3 divergences to stop this freight train. So keeping it very, very simple and very, very basic and keeping it very, very focused on the most remedial 101 approach to trading as a brand new user is going to take a lot of the stress off of you. It's going to take a lot of the opinion out of the equation. And your entries should be very mechanical. And this tail on the large chart, I don't have any rules, Ollie, that say if there's divergence on the small chart, don't take the trade. Because, so let's think about it. Hold on, let me go back to, and let me open this one up. So yeah, you're talking yourself out of it. You decided that one divergence is enough. One tiny little small chart loss of momentum is enough to counteract this look. Does that seem right? That one tiny little divergence on a small chart could overwhelm odds favorable momentum on the large chart? Absolutely not, Ollie. And that's why when we talk about these termination conditions, and I say the only thing on a small chart that will keep me out of a trade, that will keep me out of a high probability trend trade, Ollie. Thank you, Pete. The only thing on the small chart that will keep me out of a high probability trend trade is 3 divergences. If the rules are met, 3 divergences is the only thing that I'll allow to keep me out. Hell, Ollie, 2 divergences doesn't even scare me. 3rd divergence. So we may have just tripled your trade count. Look at this one. Off of a fib and a divergence, and it pushed it right back to a mid-band and 1-to-1 inside of favorable large triggers. 2nd divergence. If you missed the first entry, there's your 2nd entry. 3rd divergence says, all right, Ollie, game's up, get out. We may push up higher. Same thing. 1st divergence, perfect entry. 2nd divergence, ooh, still stays inside of those trigger lines, the correction point. 3rd divergence, game over. So awesome. I'm glad you said that. Thank you for saying that. Guys, you have no idea. When you pop a comment in the room like that, it's going to open doors for you. It will open doors for you. And guys, that's it for high probability trend trades. Right now, ooh, check it out. PFI. And Tom, see how the large triggers are above the reversal bar marker? Does everybody see that? There may be a giant sucking noise. I mean, it's a termination anyway. Giant sucking noise. I don't know what trade you're taking, PFI. Feel free to annotate a chart and drop it in the room. But if you're in a short trade, you're fighting two termination conditions in the gap theory. And if you're in a long trade, you're fighting the trend and really strong small triggers. I wish you nothing but luck, my friend. Oh, look at that. 3 divergences in the same price range. And support. And the gap theory. It's almost as if PFI says, you know what, Mark? This isn't a high probability trend trade, but I'm beginning to recognize patterns that may create an advantage. And suddenly PFI doesn't look so silly. 1, 2, 3 divergences, 2 termination conditions, and the gap theory. PFI says, I recognize this. Giant sucking noise, like a vacuum, Tom. Pop right up to them, more often than not. But guys, you gotta keep it simple first. There's a couple looks that are so important. Tom, can I put you on the spot in front of God and everybody? How many pictures of strong triggers have you taken and put into your spreadsheet? About 10. Perfect. Guys, this is the most ignored drill that I've given out. And this is probably the most advantageous drill that I've ever put out. But Tom, you're super cool with momentum. You haven't missed a momentum question since day 2, right? Okay. So rule number 2 is a clear path. So I ask the same questions. How many pictures of termination conditions in clear path? Have you started filling out this part? Guys, fill this out until it's easy and then start working on the next one. All we're doing is we're creating this recognition, guys. Taking pictures, annotating charts, creating recognition. And Tom, I promise you, by the time you get to 25, you're never going to confuse the two. You're going to be cool with it, which means that you're going to have everything you need on a large chart, everything that you need on a large chart to start looking for your entry. So guys, I'm going to give you this. That's going to help you become a chart reader. I'm also going to give you the high probability trend trade. I will in a little bit, PFI. We'll go back. It's gap theory. Gap theory, same reason to mid-bands of terminations, gap theory. So guys, here's a high probability trend trade checklist, and this covers the rules for the high probability trend trade, and it also gives you pictures. So if you're studying momentum, I'm going to give you this, and you can go right to the odds favorable momentum, and you can see exactly what it means to have the strongest triggers ever, and you can also see what it means to have that nasty little anything can happen look. This is your termination conditions. If price reaches an area and none of the triggers break, it will always be a termination condition. It will never be a clear path. Potential is just that. It's potential. It's not an area that's broken. It's not a clear path. But when the small and the large are through, the area is broken. Guys, go take these pictures. You've got to get to the point to where you don't confuse it so that you can speak to yourself in terms of advantages. And then there's your window of opportunities, guys. So I'm going to give you that as well. I already gave you my spreadsheet. I'll do it one more time in case you were late to class. There's the spreadsheet again. And then guys, I'm going to give you the KISS plan. And guys, this is designed to optimize your chances of success with the high probability trend trade. This is designed to give you the best of the best. This is designed to turn you into a chart reader. This is designed to give you a plan that wins more than it loses. Always, Tom? Are you telling me that always happens 100% of the time, every time? Without fail, without question? Oh, so you're saying sometimes it's not your trade because the rules aren't met. Did you catch the little sarcasm in there? So here's the deal. Remember when I said 90% of your day is sitting on your hands doing nothing? So you're telling me you don't have momentum. I'm telling you your rules aren't met. Make a choice, right? Pretty cool, right? And guys, it pisses people off. And people ask me all the time, well, Mark, how do I get in when my rules aren't met? Well, shoot, you don't. And Tom, I'm not trying to be a butthead by doing that. But it really is that simple. Well, Mark, I didn't have the best momentum here. How do I enter? Well, you don't. Make it habit. Make the market. You want me to make it happen? You got it. Hold on. Is it coming? Do we have one setting up? Guys, there's only one surefire high probability way. Will there be another trade eventually? Let's try that one. Concentrate and ask again. All right, let's see. Ooh, sorry guys. The futures markets are never going to trend again. The magic 8 ball. But isn't it funny because most of you guys believe this. Most of you guys believe that it's just never going to come again. But it will. It always does, guys. These patterns have been repeating themselves for as long as there's been futures markets. And you just gotta react. Trading book, that's awesome. So I'm giving you guys the plan. And Tom, this is exactly what I just said. This is you committing to the idea that you want the best of the best in the beginning, that you want the highest chance of success, that you want that confidence that comes with it. And what happens is it teaches you patience at the same time. Because you're not going to get the high probability trend trade 1,000 times a day. You're not going to be active all day long. And trading book, it's worth waiting for the high probability trend trade. And guys, everybody in this room will tell you that it's worth waiting for it. But you've got to fight that devil on your shoulder to wait for it. You've got to believe that the next one is coming. And let me just say something. If you don't scroll back on a large chart, if you don't go back and look at these trades happening and study these trades happening, then you're never going to believe that next trade is coming. I know you get it. I'm just on a tangent right now, right? But what's cool, yeah, I know. It happens a few times. High probability trend trades, Tom, you might get 3, 4 a day, maybe. You might get 13, 14 a day, maybe. We never know. It just depends on what the market's doing. But the one thing that you guys forget, so in your first week, when I tell you to be patient, it pisses you off. I don't want to be patient, Mark. I need all the money. I need all the money now. Because how am I ever going to eat next week if I don't make every penny in the market this week, right? Guys, all this is the beginning. This is the foundation. This is your first trade. This is the one that opens doors for you. Learn this trade. This trade has to be easy. And once it's easy, there's so many other opportunities. But what you got to do is you got to be able to define entries, and you've got to understand the concept of momentum. And you've got to get the idea on termination conditions, because I said it earlier and I'll say it again. Once you understand momentum and a clear path, guys, it's going to open 1,000 doors for you. And there's so many opportunities to make money in the market. So define your entry. Keep your management very basic. Keep your management very mechanical, guys. Your initial stop always, trading book, is 4 or 5 ticks beyond the trigger lines. Always. That never changes. Doesn't matter what market. Your stop is always 4 or 5 ticks beyond the trigger line. If you get a reversal bar in the direction of the trade, this is right on the plan for you guys. If you get a reversal bar in the direction of the trade, your second stop is 2 ticks below that reversal bar. That's it. Initial stop is below the triggers. First stop placement is below or above the reversal bar, and it's written out right in the plan. There's pictures of both. Your first contract is $100. Your second contract is $200. And guys, with a very mechanical approach, with a very mechanical entry, with a very pragmatic, a very emotionless, opinionless approach to trading, you can be successful as a brand new user as soon as you get these basic concepts down. And as you learn them, you got to keep doing what Tom's doing, what Trading Book did, what most of you guys did in this room, is you have to keep asking questions if you're not sure. And you know, my brother always says, you've got the greatest software out there now, guys. You've got the best of the best. The only thing you have to do is learn how to use it. And he encourages people. I saw him yesterday in the room encourage people. Prove me wrong. Be skeptic. Tell me it doesn't work. Follow these rules and tell me it doesn't work. And what's going to happen if you follow these rules, guys? Has anyone done it and had the results? It turns out that Nexgen isn't wrong, that I'm not wrong, that you can make money with a high probability trend trade if you learn how to follow the rules. And once you can do it, guys, it opens the door. There's that 50-50 trade. There's that 50-50 trade. There's that second trade. And I'm giving you a picture to optimize your chances of success, guys. And the rules and the reasons and how to manage it. And all of this is dropped in your lap. And all you have to do is practice. All you have to do is post in the room, track your trades, and take so many pictures that it becomes easy, guys. And you're gonna find your way in this business. The more you avoid the path, guys, the harder it becomes. And I tell you that from my own journey. The more that you stray from the path, the more difficult it becomes. So I just dropped in the room. I just gave you Chart Reading 101. I gave you the high probability trend trade checklists. I gave you the KISS plan. I gave you the PowerPoint that I teach with every picture. And now I'm going to give you something else. First, I'm going to give you this. And this is called exit conditions. And you guys got this. I just dropped it in the room. And there's two things that you have to know before you start trading live, guys. There's two things that you have to know like the back of your hand. And that is why you will enter a trade. Initially, this is the highest probability trend trade, guys. This is you making sure that you have a very comfortable grasp on momentum, clear path, and entry. And then you have to know what it's going to take to get you out of a trade. And that very simple, basic KISS management plan, guys, it's right here. You need to study this, and you need to keep your management very, very pragmatic as well. And this right here should be all you focus on for about 20 days as a brand new user. Avoid the temptation to catch the trades that you see other people catching. Avoid the temptation to take chances that are unnecessary. Avoid the temptation of deviating from this plan. But ask a million questions to make sure that you're executing properly. And then what happens is you find more reasons to manage, better management, bigger moves, smaller moves, more aggressive moves. And then once this becomes second nature, guys, then you go to the second trade. And you double your trade count and your potential to make money. But you've got to keep this and make it easy, or you're going to confuse it with this. And then, Lord help you, if you add a third and you're still not good at the first one. It becomes a mess, guys. And you're committing to rules met. You're committing to patterns that have been proven to win more than they lose. This is the key to success. Successful traders are most often defined by their ability to do absolutely nothing when there isn't an advantage present, when there isn't the rules met. And it's not the people that trade the most that make the most. My most successful days are typically my least traded days because I wait for the best of the best. Because let's face it, my investment is worth it, guys. So you also got a copy of that, and that'll help with management a little bit too. I'll give you stuff to think about. And then I'm going to give you one more thing. Well, you've already got it, but I'm going to share it with you. And I do want to talk about this because I think this is so important. What if Nexgen to make radar on 13.2 to be a window and shows which instrument has odds favorable momentum? Trading book, God already made that radar. It's called your eyeballs. Watch your charts, man. The more you remove yourself from the process, just look at your charts. And if you can't keep up with all the different charts, well, then you're looking at too many charts. I mean, people ask John all the time, John, can you make a ding when divergence prints? And John says, no, watch your charts. And then and that same person gave him a 1-star review. John Novak is a piece of crap and he wouldn't give me a signal that I could do with my eyes. It's true. So get in the habit, guys, because what happens is when you're insistent on making sure that your rules met and you're not relying on a ding or a fluctuation or a big green light to do it, man, you're taking control of your destiny. You're assuring that the only thing between you and success is your ability to read these indicators. So I love it. I'm a big fan of that. This is daily goals, guys. Hey, Mark, I keep blowing out accounts. Hey, Mark, I keep fighting. Hey, Mark, I give it all back. And then me to John. Hey, John, I keep blowing out accounts. Hey, John, man, I'll be in a trade and I keep hoping for really big moves, and then the market stops me out and I lose money, and it's so hard. It can be, Morgan, for sure. It really can be, because most people only leave a review when things go wrong. People don't tend to leave reviews when they're happy. They go on with their happy little lives. So when people tell to me, Mark, I really just said that. When people say to me, hey, Mark, I'm struggling with Apex and I keep hitting my trailing drawdown, or hey, Mark, I keep having great days, or I'm so close to my goals and then something goes wrong. Steve. I'll tell you what, guys, for $100 a phone call, I'll put you on speed dial, and when I see odds favorable momentum in a market, I'll call you. Because that happens enough, I would never have to trade again. So let's talk about daily goals, guys. And I know that this is common for everybody. One of the most common things that I see every day with traders, and that I've seen in myself, is giving it all back. Hitting my claimed daily goal and still giving it all back. And you don't have to answer, but I think most of you have done this. One of the things, it might not too, Morgan. One of the things is learn how to win. Learn how to be consistent. Learn how to get paid, guys. You've got Fibonacci lines. And let's go look at Fibonacci lines real quick. If you were short right here, hypothetically, if you were short right here, is there any reason not to get paid at a line? And guys, this is the biggest thing. If you were long, get paid at a line. These lines can stop the market. These lines stop the market more often than they don't. And when you've got the potential to break, then maybe a runner. No risk, right? But one of the biggest challenges is people refuse to get paid. And they hold for these big moves, and they have outrageous stops. So when they lose huge. And then that little devil comes back and it says, hey, all it takes is one more trade to get it back. All it takes. Why don't you double your contract so you can get it back faster, right? And you start breaking away from the plan. So guys, I wanted to show this. $200 a day. Raise your hand if you think you could make $200 consistently every day. Raise your hand if you believe you could make $200 consistently every day with this software. There's no doubt in my mind any of you guys could. There's no doubt in my mind any of you guys could. When was the last time you had 5 winning days in a row? Some people do, some people don't. So what happens is most people tell me, today's only one day, Z-Robot. This is your 5th winning day in a row? I love it. There's no reason not to have it. But what happens, guys, is everybody that tells me that they can make $200 a day doesn't. Does that make sense? They tell me I can make $200 a day every day, Mark. That's no problem. That's too easy. Do it every day for a week. Train yourself to stop at a goal. Train yourself to hit the brakes when the goal is met, right? And then the next week, up it. This is a marathon, not a sprint. Practice getting paid and then stopping. Practice getting paid and then stopping. And then, guys, you have to have a number the other direction too. How much are you willing to lose in a day? Make it ridiculously low for a week. And when you hit it, stop. And what you'll find is that you'll still have a great day. You'll still go do all the things that you love. Your dog will still love you. Someone's still going to cook you dinner. But learn how to hit the brakes, ladies and gentlemen. This is the biggest challenge that I see. And it does not take a lot of money every day to get into a six-figure income. It doesn't. $200 a contract is a six-figure income. And then, have you guys heard about copiers? John Novak, their programmers just finished it. Make your money on one and then mirror that account. Make the same $200 a day on one account, mirror it on a second, and suddenly it's $400 a day. Do $100 a day, mirror it on 10 accounts. Suddenly, that $100 turns into $1,000, guys. One of the greatest things you can do with futures trading is the compounding. Is going through and taking your profits and turning them into more, and not taking more trades, but rather taking better trades. So daily goals is in there. Think about what you need to make. Think about what you're willing to lose. And my biggest thing that I want to tell you guys is learn how to stop. That's the hardest thing to do in trading. Learn how to stop. And the easiest way to do that is to say, I need to make $200, make it, shut down, and go do something else for the day. All you're doing is you're training your brain that it's okay to turn it off when you hit a number. So guys, that's my first hour. Every day. Crude oil didn't give us anything, did it, Morgan? S&P is coming directly off of a termination condition, 100%. Kind of crazy. And then PFI, gap theory didn't happen, did it? So why do I say every day? Don't fight the trend. Don't fight the trend. Guys, you don't have to fight the trend to make money. You just don't. So PFI, the gap theory was in play, right? You had all these termination conditions, but you didn't have the advantage of trend. You were going against the small triggers. You were going against the large triggers. It had the potential to close the gap, but it didn't. And that red background said, let's focus short. Let's focus on rules being met short. And guys, these are the trades, and you may have gotten paid a little bit on this one, PFI. But as a brand new user, it's eliminating those trades that are low probability. It's eliminating the trades that lose more than they win. It's eliminating the trades that are draining your account. And if you're not taking pictures of your trades, if you're not studying your trades, you probably don't know which trades are draining your account. You probably don't know that you fight the trend 10 times a day. You probably don't know that you don't have strong triggers if you're not going back and looking. So guys, use the spreadsheet, please. Take pictures, ask questions. I'm gonna go stretch my legs. I'll be back in about 5 minutes. When I come back, we're just gonna click on all of the pictures. All the pictures. Back in a minute, guys. let's get back to work. Guys, I'm going to scroll up to the very top of the room and I'm going to start clicking on the pictures that have been posted. And when I do, I'm going to tell you all right now. It doesn't matter to me what kind of trade you take. It doesn't matter to me whether it wins or loses. I can't stress that enough. It's not about wins or loses in the morning, in the beginning, wins or losses. It's about following rules, guys. It's about having advantages. It's about being able to talk to yourself in terms of these advantages. And this is what I'm going to relay to every time. Every time I open a chart, this is what I'm going to talk about. We're going to talk about the momentum, whether you used it or not. We're going to talk about the clear path, whether you respected it or not. And we're going to talk about entries, guys. And what you're going to find is that you're probably going to get the best feedback if you're a little more advanced on entries. And you're probably going to get the best feedback when you annotate your charts, when you tell me exactly what it is that you saw. And if you omit that, if you don't tell me what you were reading, well then you're not giving yourself anything to study tomorrow. So make sure that your charts are annotated when you present them. Jonathan, you dropped this one in last night, and I wanted to bring it up. And guys, if you drop pictures in the trade after class and stuff like that, I try to go get them. Sometimes I need you to bring them back because I get lost sometimes. But there's a couple things that I want to notice, and I know that you were experimenting with a counter trend trade. And Jonathan, this is going to sound ugly, and I don't mean for it to. I'm glad you lost. You should. There's just no reason. The market went up, right? Guys, we don't need these little snippets when there's easy runs. We don't need these little bits when there's easy trades. So termination reverses the market. Guys, that's powerful. Odds favorable momentum, that's powerful. Potential to break, that's powerful. Jonathan says, hell, everything says down. I'm going down. And let me get paid at a fib. And then Jonathan, I love this. High five yourself for me. Jonathan says, holy crap, everything is still screaming. Let me clear the fib, little momentum style, and I'll take it to the next fib. And this is awesome, and NASDAQ is fast. And I'm going to say this, and we're going to say this a lot today, guys. Momentum for the win. Strong triggers, pushing a market in the direction of the trend. Potential to break, potential to break. Trading from the areas. So many things right with this. So many things right. And then Pete's got 3, so I'll click on all 3 of them. Weak triggers, rolled down, separated, odds favorable, no clear path. So, guys, when is the mid-band determination condition? When the large triggers are a full bar away. There's another look at it. When the large triggers are a full bar away, it's likely to close the gap. It's not guaranteed to close the gap. We learned that one this morning, right? But this is a pattern that repeats enough that says if you get in short, he takes the first one with momentum directly into the 1-to-1s, had to suffer through the gap. I love it. Chart reading. There's the gap, had to suffer through the gap. He knew that it was likely to close, and guys, he kept a stop where it needed to go. And then he gets paid. And then everything clears, and he gets in, and he gets paid. And then he gets the high probability trend trade, and it didn't work. This is brilliant. Everything says down, and he goes short. He understands the patterns, and it keeps his stop in the correct spot. Everybody say it with me, where the market shouldn't go. And then once he clears trouble and has momentum, he gets right back in and is able to get paid. And then the only thing that I might say, no worries, Ollie, the only thing that I might say is that this trend trade set up beautifully. This could have been a 2-ticker, right? With 2 divergences, that might have been a 2-ticker. I don't know if I would have kept that much risk on that one. That's just me, though. That's my management. Pete, great trading. Great trading. And then let's do it again. Everything says down. And man, this is where it gets tough. The momentum is slowing. There's a million divergences, and it's just weird, right? And they're clearly grinding, and there's a giant fight. And I like that you waited at least until the trigger lines get below the problem, Pete. This is kind of a big deal. You let the smalls break through, right? You let the smalls get through. Everything's angled down. That's insanely impressive patience. Because I know that you spent an hour going, here it comes. Okay, no. Here it comes. Oh, son of a gun. It's almost there. Shoot, not yet. And then when you got a couple key indications, you were able to capitalize. Your patience, your ability to do absolutely nothing created an enormous amount of success. Guys, I'm going to use so many stupid cliche catchphrases. You're going to hear them in your sleep. My ability to do nothing is the reason I'm successful. Great job, man. And then let's see. Everything says up. Clear path. Where did you get in? Is it really a clear path, Pete? Do you really believe that when price hit resistance and none of the triggers broke through that path was clear? New students, what do you think? Pete's got a great plan, and he doesn't mind me doing stuff like this, I hope. No, hell no, it's been hit. So what's the very basic? And guys, I'm not trying to make Pete a better trader here. Pete's got a great plan. So I'm just going to write out what it means to me to have a termination condition. Price reaches an area. Triggers are all below. Textbook termination. Does that make sense, everybody? Price reached an area. Triggers are all below. Textbook termination condition. And I understand Pete's language. Not a clear path. Rule 2 not met. Okay, so I'm doing this for the classroom. I'm doing this for the new users. I'm doing this to go put it into my 101 to make sure that I understand termination conditions, guys. Don't worry, Pete. I'm getting you on the other side. We're going to see the other side of the coin. Because what Pete is saying, and I love this, and guys, this is a result of being a chart reader. Pete says, with this level of momentum, this is likely to retest. And he knows that it's likely to retest because it's hard to stop that much momentum. He's so in tune with rule number 1 that he says, when I've got this much momentum, and it pushes all the way back down here, he goes, I'll give it a go after a reversal bar. Because his clear path means that he has room for the retest. Fair statement, Pete? His clear path, defined by his rules in his trading plan, say that he has room to the retest. The retest is not guaranteed. His ability to recognize patterns, his adherence to his own rules, says that this is a look that I'm willing to take to see if this much momentum goes back and retests the fib. That's his clear path, but it's not high probability. And it's very low risk where you're getting in, absolutely. So, Pete, I had to do the lesson for the classroom, right? I promised I would go back to momentum, clear path, and entry. But guys, I don't want you to think because your trade isn't high probability that it isn't a beautiful trade, that it isn't an outstanding usage of these indicators. And that's exactly what you had, Pete. So, good stuff. You have a clear path issue. I don't. Mine's a language issue, though, right? Like if you tell me you're going to wash the dishes and then someone else tells me they're going to wash the dishes, I don't have any idea what wash is, right? That's not my familiar language. I keep clear path for the classroom super, super basic. You either have it or you don't. You had it on this fib. Didn't have it on this fib. It's fun. It's just language, guys. I think that as you're learning something new, language is very, very important. I think consistency is very, very important. That's my opinion. I've been teaching people to do this for a while. Momentum up, anything can happen triggers. So I love this too. So Pete has has weakened triggers, but he does have a clear path. Loss of momentum, anything can happen triggers, but there is a clear path. And he's like, man, without a lot of momentum, it might push lower, maybe to Fibonacci support that all the triggers are above. So he gets in a little lower, and I'm guessing his risk was probably around 17, which means that he only had about 11 ticks on it. He says, you know what? I really do expect this Fibonacci area to hold based on the trigger line location, based on everything above, based on all my indicators going up. He says that's worth the risk to me, but he knows that that momentum is dying, so he takes quick profits and he doesn't sit and hope. 17 stop, right? I knew it'd be somewhere right there. So 11 ticks. And guys, he gets paid because he knows it's not perfect. And this is one of the things why recognizing when it is perfect pays dividends, because you recognize when it's not perfect. And this goes back to, how do I stop giving money back? When you know it's not perfect, when you know that your small triggers are on the wrong side of all the triggers, when you see divergences printing, you may take a shot, but to sit and hope that this is the home run, that it's telling you it isn't, that's where people make mistakes, guys. Be okay making 50 bucks every now and then if that's all the market's going to give you. All right, and then one more. After your exit, I want to see what you wrote. Anything can happen. Market is chumming, so practice sitting on your hands. You guys remember when I said decisions are made at key areas? This key area created a tail right back to the large triggers. This key area created a bounce all the way back to the broken area. This key area is creating a huge fight right at the key area. I'm telling you right now, guys, Fibonacci levels are freaking amazing. Nexgen Fibonacci levels are insanely accurate. And if you take those couple little things and put them together, you don't have to hope. And great job sitting on your hands, man. That patience piece is what it's all about. How's the pace? Am I slow rolling enough, guys? I'm trying not to hurry through these things. All right, Ollie. Strong top. There's that gap theory. Do you guys remember the gap theory? Because we already talked about this one a lot on Pete's chart. You guys remember, if price hits a mid band, if the large triggers are a full bar away, it's likely to close that gap. Is everybody cool with that? That means that entering at 32, the only stop that makes sense is 50. That's 18 ticks, guys. That is 18 ticks trading directly into a termination condition. It's okay. This is Ollie's trade, not mine. But when this fib reverses the market, that's a great sign. When the smalls are below the large, that's a great sign. Pattern recognition, understanding the gap theory, guys, what it does for you is it says, you know what, maybe I should wait for it to close that gap, and then I'll take a reversal bar or something to get in. You'll get the same fill, it looks like. And sure enough, he gets paid at the first trouble. He's got zero risk as he gets into these areas. I love that. And with the strong triggers, look at this. Expect fib levels to be broken. Never expect fib levels to be broken, ladies and gentlemen. Say they have the potential, because that keeps your guard up. say that they have the potential to break, because that keeps your guard up. That keeps your management hat on, because there is no expectation in the market. There should never be any expectation in the market. There's only up and down ticks. The expectations that you create are going to establish pain in your life, because if that doesn't break, you're going to get butt hurt that it didn't break for you when you expected it to. But if you say it has the potential, I'll be willing to manage aggressively. But if it doesn't come back for me, I'm going to ride that potential down to the next one. Pretty cool. I hate the word expecting. No offense, Ollie. I hate the word expecting. Potential. Using market flow signal chart to manage stop. I'm not sure what signals you're using, but that's cool. Oh, right there. Up bar, then down bar. That's a great pattern, Ollie. Good job. Same trade. Same trade as Pete. Both of them knew that it may go back up there. Both of them accepted it. And both were able to capitalize. Pattern recognition, ladies and gentlemen. The patterns repeat every day. Every day. The market has a memory. The more pictures you take of them, the easier they become to recognize in the moment. All right, I keep taking this trade, 75% fill and win, all based on triggers breaking fibs and the lots of room, strong, fast momentum. A pullback to fib that just broke. I trail the entry from the fib to the fib broken. You're taking a momentum style trade. Z-Robot, this is a momentum style trade. That's all it is. And I love it. I'm a big fan of this trade. So I know that you're still working on coming up with rules and stuff. So let me give you a little run over here. No, you're absolutely right. You're killing it. And guys, this is such a good example, Z-Robot, that y'all are going to see what you see, right? Once you start to understand the basic concepts, you're going to start to see things. You're going to start to see patterns. And what you took, and here's the rules for it from Nexgen, have a good top or bottom. That is going to create dividends. And that's actually imperative in the rules. Make sure that you haven't hit an area, and then your entry is perfect. Let it break, let the small triggers break, and then snap back and enter. And you did it beautifully, Z-Robot. You just took a momentum trade. Nicely done, man. Everybody thinks that I'm shackling them to the high probability trend trade. Guys, I want to see you grow outside of it. There's so many trades to be made. So many advantages to be had. So much love to be shared. The PBT. I love this. Not for new users, meets no Nexgen rules. And guys, this is an awesome trade. I love this. So here's the deal. Once again, man, how many times am I going to say this today? You will develop a trade plan based on your ability reading indicators. You will develop a trade plan based on the patterns that you see, based on the things that you've seen repeated, based on your own study. And when you prove yourself that they create an edge, you can do it. Pete has a trade where he uses these higher time frame fibs, and he takes a low risk shot at it to see if they're going to reverse. And he knows full well that he might get run over every now and then, and this time he did very much. And guys, this is strong trending when a market smashes through area after area after area. When these small triggers are riding piggyback, guys, the only way I would ever consider a short trade is with the large triggers rolling on the large chart. And Pete, maybe that's something to incorporate. I don't know. I love your trading. I learned from your trading, Pete. I'm not going to lie. But when I've got that strong trending defined, I really want to see those large triggers roll. Otherwise, it just seems to really lessen the likelihood of success. Just a personal observation on that one, not a trading rule. All right, let me to figure out which chart is which. That's the 5-1. That's the 13-2. So everything's set down, and then Zorro, you had to play games in that chop, huh? You take the short and quick profits, and then you take the short and quick profits, and then you let it all clear, and you take the short and you take profits. Yeah, base hit. Pete, I love it. It's not something that I would ever even consider in my own trading, but I sure do appreciate how consistent you are with it. And I think that's the best lesson to take from that trade is Pete doesn't say, oh, it's Tuesday and the Mets are playing, I can't take it. Oh, I had scrambled eggs for breakfast, I can't take it. Well, I don't know if I feel good about it today, I can't take it. Pete says, this is my rules. I'm going to follow it every time, and I know that I'm going to lose now and then. Years with the software. I love everything about it. Zorro's like, I don't have to hit a home run. It's not perfect. Let me get in, get out, get in, get out, get in, get out. And then when it's perfect, I'll make bigger profits. And I don't know if you guys see this, but there's a 1 and a comma on his P&L. He's up over $1,000. And that was at 8:21 a.m. 8:21 a.m. He's up over $1,000. Zorro, we should be on the golf course together right now. You made your money. I made my money this morning. Let's go swing some clubs. How we doing, guys? We're getting close to the end of pictures, so I need you guys thinking about things to do. And couple of dollars is all subjective, right? Everyone has a different idea of what a couple dollars is. I think if you can make 200 constantly every day, you can mirror enough accounts to never even think about working again. That's my own personal thought on it. I love this massive momentum down. Separated, clear path, and you just rock star it. Z-Robot. There's your entry, brother. That's that one you like, right there. So in case you didn't, steal that picture, man. Put it in your spreadsheet. Read what he wrote. That's a good one, Pete. Nice job. All right, Tom, let's see what you did. I like it when the newer people put it in. Odds favorable, hell yeah. No clear path. Not quite even 50-50. Tom, what you did is you just posted the most difficult underneath trouble. That's the key. You posted the one thing, and it's funny when it happens. You actually had a clear path when you were thinking about taking this trade. There was a fib update that came in later that created this blue line. So your path was beautiful, man. You hadn't gotten to anything. I mean, it was smooth sailing. When this trade was taken, this blue line wasn't there. Does that make sense? So at 8 a.m., there's a fib update. And so at 8 a.m., every 4 hours or every 2 hours, there's a fib update. So what you did is you said, I've got the best momentum ever. I've got one line inside of triggers. You knew that it could go down here. This box makes me giddy. Your entry was at the top. You drew the line and ride it to the fib. So Tom, day 4, day 5. It's all starting to come together, right? It's all starting to come together. Everything about this trade is beautiful. Now just rinse and repeat. That's it. Rinse and repeat. Take this picture and put it in your favorite. It's 100% right. From the top of the trigger lines to the bottom of the trigger lines. But you're looking for the areas inside, right? So I like to use 2 boxes. I'll do 1 box for the trigger lines because what that does is it helps me define the most intelligent stop. And then I'll do another box, maybe, of where the areas are and where my entry will be. And then, yeah, this is a pretty big risk on it. And I'm going 100% basic. Your stop goes 4 or 5 ticks down here. As you grow with the software a little bit, you may say to yourself, I'm willing to risk a little bit, but do you see how it comes through in there? Your best bet is always where the market shouldn't go. Your best bet is always where the market shouldn't go. And you'll have to decide whether or not you're okay with that risk. And one of the things people will do, and I'm just going to give you something to think about because you know you're brand new and I want to confuse you. When the triggers are split like this, and the correction point is huge because of the separation, some folks will wait for a reversal bar in the direction of their trade. And what that does for you, Tom, when you wait for that reversal bar in the direction of the trade, it establishes your risk 2 ticks below it. So that split triggers creates a little indecision, so you force the market to start going in the direction you want it to go, and then you can put your stop below the reversal bar. On these split triggers, that for me is money. I love it. Pete says that's what he does. As long as the large chart is absolutely cranking, I love putting it behind the reversal bar. Because then my risk is established, and because it might go down to this area, I'm forcing it to start going up. And then Z-Robot, that's almost your trade there. Getting close. Yeah, split triggers. I think that it pays dividends if you're not willing to put the huge risk on it. So that's a big part of it. Is I'm not willing to risk that much on the trade. Let's see what we have. Ah, I love that, C-Dub. Ah. Oh my God, I can't believe that I got in with 4 contracts and lost it all and almost blew an account with a $1,500 stop due to not waiting. 4 ticks and winning big. Then another trade that was stopped out due to stop loss and blew account. I'm sorry that you blew it. So C-Dub, let's talk about the whys. Can we do this? Can we talk about the whys? And this is, I'm assuming that you want help or you wouldn't have posted this in the room. Why did you only give yourself 1.5 points to trouble? That's the first thing. Why? There's just no room. Does that make sense? There's no room. So that's my first why. Guys, one of the things that you want to have, make sure you have room to a target. And that's, you've got to decide what's enough. For me, if I don't have $200 worth of potential income there, I don't want it. But you did, you got it, and you exited right at the trouble. So good job on recognition. And then the first thing that I noticed, actually not even the first thing, because I just noticed it. C-Dub, where are your synthetic triggers on your entry chart? Is this yesterday? Is this yesterday or today? It has to be yesterday. I'm looking at the timestamps. Oh, the 14th of August. All right, that's back a little bit. So I want you to see something here. Do you notice how price didn't get outside of those large triggers? which means that your large triggers, your synthetic triggers, would have been somewhere around like this, which means that you would have never been stopped out of this trade with very simple management. They would have helped a lot. The other thing that would have helped a lot, and guys, these are common, so I don't want you to feel, C-Dub, like you're alone at all. The small chart, small, tiny, lots of ups and downs. So you knew where you wanted to get in. You wanted that mid band, right? You wanted those yellow 1-to-1s? Is that fair? But when it didn't get there, Tom, take care, man. Have a great weekend. When it didn't get there, most people say, oh shit, it's going without me. I better jump in. Sound familiar? Been there, done that, man. And then the market goes, we were just kidding. Let's go right back to the perfect entry. This happens a lot, guys. And this is one of the trading book. Have a good one, man. This is pretty common, and you see this a lot. And I see so many entries on the low tick of a bar. And one of the things that you have to say, if the market does not give me my entry, it's not my money. And you have to be willing to let it go. Synthetics would have helped you a lot in this. And then once you do all this, like once you start going, let me get rid of all my arrows and stuff, and you get in and you're like, man, I just got stopped out, and you're like, no, wait, I better get in. And then you get scared and you stop out, and then you get back in, and all of this happens. When one of the greatest things, C-Dub, is one, get your synthetics on there. Your window of opportunity was right here, right? And your stop, if all you did was wait for it to get to your window of opportunity and put your stop in the right spot, you're in this trade and it's nothing but profits. But what I notice is that I'm not positive you have rules for entry and exit yet. Do you have them written down? Do you know them like the back of your hand? Or are you just are you trading hope? Are you trading, man, I hope it goes because it looks strong? You've got to know why. You've got to know why you're going to get in and why you're going to get out, and you've got to trust your plan to a point that that you're almost arrogant about forcing the market to give you your entry. That you're just demanding that the market either gives you. Do 8 ticks then 20 ticks is not an entry plan. Do 8 ticks then 20 ticks is not an entry plan. Stop. So you just pick 8 ticks and hope for the best. Let me see. 63 and then out at 70. That is 7 points. Which on this market happens to be 28 ticks. That's a 28 tick stop out there. That doesn't fit your plan at all. So C-Dub, there's a couple very basic things that I think most people can do to realign, to get back to where they need to be. And the first thing is, gosh, I really am going to sound like a broken record today. Sorry. The first thing is you've got to know why you're going to enter, and you've got to know why you're going to exit. So this is a momentum style trade. All you're doing is you're hoping that the momentum takes you. Is that fair? The only thing that you're relying on here is momentum. So C-Dub, as long as price stays left of these small triggers and doesn't close on the other side, your momentum is rock star. 100%. Your momentum is rock star. There's no reason to exit. You could literally trail a stop on the reversal bar marker. But notice that it didn't push up until it got to the wrong side of the triggers. That's a good lesson for you guys that just jump into the market. So you have to create a set of rules, and it may look something like this. Oops. When I have odds favorable momentum, both charts, I'm just gonna jump the F in. I will stay in this trade until I get a close reversal bar on the wrong side of triggers. And C-Dub, what we just did is we defined why you'll get in, and we'll define what it takes to get you out. And what that did is that you were done. You were on the golf course after this one look. So that doesn't have to be your rules, but you have to know exactly why and exactly what it takes to get you out. And if you're driven by fear, then the best thing you can do, oh, broken record, go back to something very basic for a week or two, right? Get your head set on following rules. If you need help with your trading plan, email it to me. I'll give you my 2 cents on it. But knowing why, guys, that pays huge dividends. And I'm going to take about 3 minutes. My dog is ringing the doorbell. There's a 50-50 trade with 2 divergences. I'll be back in just a second, guys. All right, guys, sorry about that. I had to take 2 seconds and talk to my wife. She just got off an interview. Had to see how it went. C-Dub, did all that make sense? Most trading challenges can be fixed with a simplification approach to rules. Most trading challenges go away when you've got a very easy to follow plan. And the more you move stops and the more you change entries and the more you change things up, it means that you don't trust your plan yet. So you've got to put that time in to learn to trust it. You clearly know how to read your charts. And man, right click and get your template in there, because these split triggers, man, they help define entries. They really do. So thank you for posting that. Sorry I had to take that break, but I had to go be super husband for a second. You're welcome. Odds favorable, clear path, split triggers. Right? Andrew Z? And this is why, guys, this is why I talk favorable large triggers. And check it out. So what are triggers? They're just the correction point. This is where price could come back to. And you had two different spots. And when you have two different spots, that's the only place where the market shouldn't go. Does that make sense, Andrew? This is the only place that the market shouldn't go, is on the other side of these triggers with that look. So you have to define, all right, am I cool with that level of risk? Am I cool with that much risk on a trade? If you are, awesome, right? More power to you. And then the same thing we talked about with Tom and what C-Dub just said. When there's that much of a discrepancy, right? And let me like shade it from the top of the trigger lines to the bottom of the trigger lines. When the place where the market could go, could correct, is that huge. Is there anything wrong with forcing them to go in the direction of your trade? And it looks like the difference between your entry and the reversal bar entry is about 4 ticks. So it's going to cost you $80 to have them tell you that it's going the right direction. Does that make sense, everybody? I love the trade. I love the setup. I think the look is outstanding. But one of the things that our software affords us the luxury of is some crazy accuracy and some understanding of patterns. And man, when you understand that it could be either, when you understand that there could be either, it's okay to insist, right? That was a question? No, that was the answer, C-Dub. I don't have a rule that says wait for a reversal bar. Do you know why? Because every day I tell new users to wait for favorable large triggers. Why? Because then you don't have to worry about it. And it pulls this out of the equation for brand new users. So if new users, if your only option for an entry, and maybe this is a little insight onto how I teach and why I teach. If your only option, brand new users, is favorable large triggers, does everybody see how it takes the guesswork out? That it takes that entire thought process out of the equation. Does that make sense, guys? And then when you start growing with the software, you have the capacity to add a thought process to it. So C-Dub, it doesn't happen as often, right? But why do you suppose we call it a high probability trend trade? Just because it doesn't happen often doesn't mean that it's not the best case scenario. And if you're brand new with the software, ladies and gentlemen, don't you want to be in the best case scenario while you're learning to read your indicators? C-Dub, probably didn't take you long to figure that one out, right? Odds favorable and nothing in the way. Would everybody agree? Once you have momentum and a clear path, like this becomes pretty easy. The large chart's not a huge challenge for most people. But entries happen all the time. Entries have different looks. So initially there's the best look, and then there's the I'm starting to read my indicators look. And the difference, C-Dub, is there's maybe a 20-day gap between the two. Maybe a 20-day gap between the two. But for whatever reason, people feel like they have to only take the high probability trend trade. Mark said that I can't take a trade if it's not a high probability trend trade. So F Mark, I'm just going to break my rules and get in when I think it's right. Guys, I'm like your grandmother, and all I want is what's best for you. And when I tell you to put on your helmet, it's because I don't want you to hurt yourself. But let me show you on the KISS plan one thing that everybody forgets. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your ability reading the indicators. So C-Dub, that uncommon 3 to 4 times a day high probability trend trade, opens the doors for you to recognize the patterns where you can get paid. Does that make sense? It's like when Tom said it always has weak triggers when it breaks an area. No, it doesn't. But that's your patience being tested, guys. That's your patience being tested. There's a lot of good trades. You just got to wait for them. Let's see what we have. This is Steve Diego. Weak bottom, divergence, odds favorable, potential to break. Strong triggers, separate from large, no clear path 50-50. Absolutely perfect chart read. There's your split triggers, Steve Diego. Could go to the large, could go to the synthetics. Went right to the synthetics. Steve, did you notice, did you put enter inside favorable large triggers at the first fib? But the only line that you had even close to a trigger was this one. And then these yellow 1-to-1s in here. Do you see that now? There's that big division. Your only line at a trigger was at the synthetics. So reversal bar maybe for confirmation, but your stop placement is great. So it's not inside. So when I say inside, I didn't read your little thing there. So let's do, just for clarity as why I'm doing this. This is in between triggers. This line is actually inside. So no lines inside. Top to bottom, there's a line inside. So when I say inside favorable large triggers, this is awesome, Steve. I appreciate that you posted this. I mean literally enveloped, engulfed by those triggers, not in between, floating in the middle, because I believe firmly in the idea of the correction point, that price will go somewhere between the lowest line and the highest line. Does that make sense? So when they're floating in the middle, they may stop the market, but price still might correct. Great question. That second lower divergence took you out. That's okay. Nice job, dude. It's a good trade. It's well executed. You're welcome. It's just, I think it's kind of cool that we came back and we saw that split trigger again. And then here we have that strong trending market. Guys, there's that piggyback look, right? Clear path, piggybacking. You even wrote it. Steve, you've definitely been in class, man. Breaking through fibs. That's it. That's strong trending. And Steve knows. Buy that mid band until it stops working in a strong trending market. And you had the fib as the backup. I love it. And the fact that you recognize that you're on the wrong side of trigger lines, that's huge. What does that mean? It means that price is likely to correct right here. And once it gets below them, it's a crapshoot. You don't know if it's going to stop. You don't know if this weak look is going to take you all the way back to the mid band or this, or that's going to be a reversal point the same way it was here. So once you get to that wrong side, guys, you're hoping that mid-band holds. And Steve says, wait a minute, I've done a lot of study on termination conditions. And I know that if price reaches support and all of my triggers are above, well, then this area is likely to stop the market based on termination conditions. So if everything says up and everything is trending and everything is flying and I get a pullback, hell, let's see if that rule works. And I'm assuming your stop was a little bit beyond the fib, Steve? It's a chart read, right? That's what it is. That's pattern recognition, creating expectations that he's seen more than once, that tend to win more than they lose. He's willing to risk his money because he feels he has an edge. Great job, dude. Great job. I love the chart reads. You guys notice 50-50? Look at the nonsense. How easy would it be to get caught up in that? How easy would it be to take losers? 50-50, couple divergences. Guys, that's not your best case scenario. All of my triggers are above support. Wait a minute, all of my triggers are below resistance. Is this a long trade or a short trade, guys? Help me out. My large triggers are up, my small triggers are down. Everything's below resistance, but everything's above support. Should I be going long or short here? Sit on my hands. Wise words, right? What about these? After that termination condition, did that 50-50 turn into anything? Did that 50-50 turn into anything? Can we scroll back and see? That one was kind of ugly. That was kind of ugly in there, wasn't it? More indecision right at key areas. More indecision right at key areas. That one pulled right back. It's fun, isn't it? Look at that. 1-to-1s to the tick, guys. Pushed it all the way back. I love this stuff. I love learning. I love the patterns. Guys, I love taking pictures. My Snagit is at 39.51. My Snagit on my laptop is at 9,000. And that's this year. I'm about a year in. October will be a year on Snagit. I'm at about 11,000 pictures this year so far. There's a reason that I recognize these things so quickly. Do I use a reversal bar for entry? You hate it when it pulls back again and gets nervous and you get stopped out. It's up for you, up to you. You can use a reversal bar. What does your large chart say, C-Dub? Your large chart says odds favorable. Your large chart says room to the target, right? You're going to have to make the decision. I can't make it for you. Your lines are before the correction point, and it went right to the correction point. You can wait for a reversal bar, and you still stayed 2 ticks above it, and you still won. So maybe what you need to do, C-Dub, is see this little magical word right here, Sim 101? If you're scared to lose money on Sim, how are you ever going to manage your finances live? Take the trade, annotate the chart, see what happens. Guys, simulators where you let it play out. Simulators where you gotta take your licks, where you've gotta make your mistakes, where you've gotta trust your plan, where you've gotta trust your management. If you are incapable of holding the correct trade in simulator, you're probably never gonna do it live. That's what simulator's for. So C-Dub, take the reversal bar. These little triggers don't mean anything. Look at them over here. Trust it. Even if you got in down here, it went to the fib. It's because you're fearful. It's because you don't trust your rules, or you don't have rules. Because you're trying to make the money and you're not trying to follow your rules, is my guess. I don't know. But if you're scared on sim, I'm telling you, develop a little faith. Most people don't, C-Dub. Most people are so focused on the money that they forget that they should have a reason that it's created. There's a KISS plan. So here's my challenge. And guys, this is for anybody that blew out an account this week. Here's my challenge to you. Take the KISS plan and follow it to the letter for 5 days. 5 days. That's all I'm asking. C-Dub, I'm not asking you to change your approach to trading for life. Anybody in this room. Take 5 days and follow this KISS plan. Every trade that you take, annotate the chart and talk about momentum, talk about termination conditions, and talk about an area inside of favorable large triggers. C-Dub, that means you got to skip a lot of trades. And on those 50-50s, you got to skip a lot of trades when there's divergence. But guys, do me a favor. Take 5 days and follow this to the letter. And tell me that you aren't successful. Tell me that it doesn't work. Prove to me that it doesn't work. You can't, because it does. But the thing is so who wants to make money? Does anybody other than me just want to make money? I want to get paid, guys. That's my goal. My goal is to get paid. What's the easiest way to get paid? Win more than you lose. What's the easiest way to win more than you lose? Have a statistical advantage, a pattern that's been proven to win more than it loses, and take the same damn trade over and over and over, and stop deviating from the patterns that have been proven to bring you success. So what happens, C-Dub, is I give people this challenge all the time, 5 days. Usually by 9 a.m. on Monday, they get bored and break it. That's true. But usually by 9 a.m. Monday, and this was the same thing. I used to be a personal trainer in a different life, and everybody that wanted abs told me that their diet was perfect. And the only reason that they don't have abs is because of a hormonal imbalance, or their kids stress them out and their cortisol levels are too high. I eat perfect, Mark, they would say every day. And I would tell them, I say, I'll tell you what, man, do it just to spite me. And then C-Dub, do me a favor. When you do this for 5 days, if it didn't work, that's exactly what I want you to send me in a private message. And dude, we will high five and I'll Zelle you money for a beer. I'm that confident. But I used to tell my personal training clients, I was like, guys, do me a favor. Take a picture of everything that goes in your mouth. Everything you eat, everything you drink. Just for 24 hours. That's all I need. 24 hours. Take a picture of everything that you ingest. And most of them would send me egg whites first thing in the morning. And then they would send me oatmeal with their egg whites. No sugar, skim milk. And they're like, see, I told you. And then I'd get a picture of their kids' goldfish. And then I'd get a picture of them snacking on something else. And usually by 10 a.m. they stop sending me pictures because they realize that they're the reason that they're not getting abs, that they're the reason they're not getting their goals. And guys, the only reason we don't reach our goals is because of us. It's because we break the rules. And I'm not trying to go Friday preachy, but what we do works, guys. It really does. Strong top, not a clear path yet. You're just going to wait. Wait for it to be perfect, right? Belt, you don't have to be in every move. So, C-Dub, man, I promise you guys, your success is like really my only focus. That's all I want. I want you guys to do great things with this software, and I want you to be successful with it. And I want you to learn how to stop self-sabotaging, which means that you have to learn to be patient. You have to realize that every move isn't your move. You have to realize that the best of the best, that you're worth it, that you are worth the perfect entry, that you are worth the advantages. And it's okay to not have them because 300 billion, guys. How much do futures markets trade daily? As of 2022, the global foreign exchange market had an average daily trading volume of 7.5 trillion. Crude oil, over 1 million contracts daily. Guys, all you gotta do is get your little cut. Get your little piece of it. No, I'm not done, Pete. Drop them in, man. I'm flapping my gums because I don't have anything to do. C-Dub, what if all you did for 2 weeks is make $200 a day? Where's it at, Pete? I'm looking. I might have missed a couple, guys. I do that sometimes. I apologize. I had Tom's. Jonathan's, did we already get yours? Oh, look at that. Momentum and clear path. Jonathan, that's freaking beautiful. Odds favorable, everything up. Get in, get paid at the red line. I'm sorry, I may have missed a couple of them, guys. Morgan, everything says down, no divergence. You take the entry, you get paid, you get out break even. Missed me because it didn't fill, so I got foolish to jump in, but it worked out. Why didn't it get you, Morgan? And Pete, I'll find yours. I'm scrolling through, or you can repost it. Why didn't it get you? And Pete, remember, I'm looking at 1 million things. It's so much easier if you repost. That's me being a little lazy, but I'm trying not to be. Where was your entry? Did you trip over a couple pennies? Cost you dollars? I hated it when my brother used to say that. Tripped over pennies, Mark. Cost you dollars. 50-50, no divergence, small triggers, full bar away. Man, I'm in at that area. Beautiful. It's a great trade, dude. It's a great trade and great management when that divergence prints on the 50-50. It saved your bacon. Nice job. We saw. Was it that one, Pete? Anything can happen, triggers. 1, 2, 3 divergences. You get in before the third on a little momentum style. I love this one right there. And when the second divergence prints, you exit. No more shorts. Hit that daily goal. Nicely done. Weakness and every area beyond. Great job. Great recognition. Take a shot, right? Take a shot. This is one of those ones where it's hard to manage. There's not a lot of room, but you did a beautiful job of it. You did a great job on the management on that one. And we saw C-dubs and we saw belts. I want to make sure that I don't miss anybody. Belts 27, 25, 20, no, hold on, 25, 20, 25, 20. So we're looking right here. Everything says up, the smalls are accelerating, and you get in right in between the two. Nice, Pete. You get in right between the two, and sure enough, it goes right to the synthetics. Was your stop below the synthetic triggers belt? So you're saying that you knew that it could correct there, so you put your stop where the market wouldn't go. I just want to make sure that we're clear on language. And because of this momentum, because of this clear path, right before you sat through divergence, you sat through a pullback, and then you said, I'm so scared. Cute little pink one-to-ones. Everything said it was going to the fib. So these pink one-to-ones belt, on any market other than the Nasdaq are pretty useless. But if you're going to get out at them, it means that you respect lines, and that's pretty cool. You need to make $30,000 a month to afford your extravagant lifestyle. I like it, Pete. Lifestyles. Ninja crashed, yeah. You know what the cool thing is if Ninja Trader crashes, if your stops are in the right places, you're good. I've had Ninja crash in the right trade and I don't worry. Now, if Ninja crashes and I'm in the wrong trade, I panic. I'm like, oh shit, I shouldn't have been in that trade anyway. Yeah, so it's all electronic, so it works. But you're going with direction, you're going with momentum, and you had a clear path. How's that for a recipe, guys? Momentum and a clear path. Has anyone mentioned that to you yet? Has anyone said, hey guys, once you can identify momentum and a clear path, you're going to find a way to capitalize? The most common losers. No, not necessarily. Weak bottom, that's cool. So notice, Belt, when I talk about the 3 rules, it doesn't reference a strong bottom or top. It doesn't say anything about it. It says that you need strong triggers. It says you need no termination conditions, and it says that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. That's all it says. Even when I give the checklist, you can take it without a good top or bottom, without a strong top or bottom, but you might have to manage it a little bit. This is just the warm fuzzy, man. The strong top and bottom, that's a warm fuzzy. But dude, when you've got momentum and a clear path, I'm telling you guys, you're going to find a way to capitalize. You really will. You know what's funny, Pete, is most people can't even imagine making $30,000 a month. The average human can't fathom what it would feel like to see $30,000 go into their bank account because of their work every month. And most people have trouble accepting that and deserving that. And that's one of the reasons, if you've ever read, and I'll drop this in the room for you guys. I love this. If you read Emotion-Free Trading, they kind of hit on that a little bit. That it's tough. And that's perfect. If that's what you made when you were working, you just got to replace it. And you're doing a great job replacing it. I had someone tell me, she's a teacher in Florida, administration, has an MBA. She only has to make $300 a day to replace her salary. That's it. I've got a buddy that's a car salesman. He has to make about $300 a day to replace his salary. That's the average human, guys. That's 70 grand plus a year. That's the average worker in America. And the cool thing is that if you're a 6-figure earner, you only have to make about $400 a day to get into 6 figures. So you got to pick your goals, right? And you trade a 4-lot typically, though, right, Pete? Which means that you're only looking for less than $400 a contract. So, guys, when you know what you need, you know what you're going after, and then you find a way to do it. And it's pretty cool how that works. They broke out. Oh, and when they did, look at that. When everything was clear and all the triggers were up, it did pull right back to support right inside of favorable large triggers. That's weird. That's odd. That's kind of cool. You didn't have momentum. Does everyone see it? Didn't have momentum, but I did have a clear path, and I had the most defined entry I could ever hope for. It's not a high probability trend trade, though, is it, C-Dub? If you're following the KISS plan, that might not have been yours. But if you spend a little time on the KISS plan, you're going to start to recognize these patterns. No, it's okay. I'm throwing it out there that not every move is your move, guys, and that's okay. But while you're waiting for the high probability trend trade, You still recognized this. So how about now? My smalls are breaking away from the large, right? If I get a reversal bar, that's my highest point of support inside of triggers. Look how quickly that can happen. It's the same. All I need now is a pullback. All I need now is a pullback. Come on, give me a pullback. Does that make sense, everybody? But the high probability trend trade never sets up. Well, it does. Just gotta be patient sometimes. Of course, they might go without us. Those sons of guns.